Hello, I'm Matt, Director of Programming here at Ascentiv. It's my pleasure to present you with some important tips and techniques to help you, as an Ascentiv TradeMap investor, to get the maximum value from your subscription. It's our goal for you to get the highest investment returns possible from your daily buy and sell signals. First, let's start with how to get returns from your own portfolio to more closely match the returns in the Ascentiv TradeMap portfolio. The simplest answer is to be ready to act when your buy and sell signals email arrives. Immediately after each day's buy and sell signals email is sent to you, Ascentiv TradeMap executes its own opening and closing trade instructions. This instantly locks in prices and updates the portfolio. Any delay in placing your own opening and closing trade orders is almost guaranteed to be filled at slightly different prices. And slightly different prices may or may not make your position more profitable. Because of the enormous leverage in futures contracts, even small differences in opening and closing prices can have a big effect on your profits, favorably or otherwise. Also, when a position is closed automatically due to price changes which trigger its trading stop-loss order, your own position may be closed earlier, later, or even not at all, depending on its originally filled opening price. If a position in the Ascentiv TradeMap portfolio is closed automatically, but your own position remains open, congratulations. Leave the position in your portfolio open in case its price rebounds favorably without triggering the trading stop-loss order. It's quite possible you'll end up with higher profits than the Ascentiv TradeMap portfolio. One of the key reasons Ascentiv TradeMap generally tends to emphasize your investment returns rather than investment profits is straightforward. Profits are determined by the way you utilize the buy and sell signals within your own portfolio. You might choose to order multiple positions in a single futures contract when opening your trade. This would be the case when you have unused risk capital available and are looking to generate more profits from your Ascentiv TradeMap investing. Or you might want to take advantage of opening a futures micro or mini-sized contract offered for various commodity futures. This would be a good strategy when the investment required for the normal-sized futures contract is greater than your risk tolerance will allow, or if it requires more risk capital than you have available. Opening a micro or mini-sized contract instead greatly reduces both your profits and risk, but preserves the overall investment return from the position. In addition, a profitable position in your portfolio might be one you choose to close early, so as to protect and collect those profits by realizing them right away, even though your daily buy and sell signals may not indicate closing the position. It's an investment cliché that losing traders tend to let their losses run and cut their profits short. Even so, you should never be reluctant to take the safe step of locking in your profits while the market makes them available to you. The buy and sell signals, which Ascentiv TradeMap delivers to you each day, is guidance on investment returns. But because all your investing decisions must be tailored to your own risk tolerance and available risk capital, you are in control of your profits. That's why your daily buy and sell signals always begins with the current returns before ever referring to profits. Speaking of closing positions, let's take a look at the 3 ways an open position in your portfolio might receive a closing instruction in your daily buy and sell signals. First, and as we mentioned, your position might have been closed automatically by your broker because its price moved against you unfavorably and your trading stop-loss order was triggered. This may feel frustrating to new investors, but experienced traders know that all investing incurs risk. The odds of success are never 100%, but Ascentiv TradeMap puts the odds very heavily in your favor. Even though Ascentiv TradeMap optimizes its signals based on a maximum risk of $2,000, you can always adjust the maximum dollar amount you'd like to risk on any position by directing your broker to change the largest price movement allowed in the trading stop-loss order. A second cause for closing a position is that its underlying futures contract is set to expire soon. Generally, when the last trading day is less than a week away, Ascentiv TradeMap gives a signal to close the position. When you close the position, don't neglect to close its accompanying trading stop-loss order too. Sometimes your broker may alert you to close a position sooner than when Ascentiv TradeMap alerts you to do so. Always comply with your broker and close the expiring position when requested. And finally, the third cause for closing a position is that Ascentiv TradeMap says the optimal direction for holding the position has changed and is now the reverse of what it was. If it was a long position before, the best position has switched to short, and vice versa. This causes two separate entries that you'll see in your daily buy and sell signals email. One instruction to close the futures contract and another to open it in the reverse direction. When you close the position, don't forget to close its accompanying trading stop-loss order too. On rare occasions, extreme volatility in the market prices will cause what's known as a whipsaw. This is when we receive a reverse signal and then very soon receive another one, reversing the prior reversal. Fortunately, this doesn't happen often, but when it does, we must endure the volatility and trust the process for a better outcome soon. Lastly, for our time today, I want to point out that there are two methods you can use when you open new positions with your broker. When opening a new position, you must decide if you'd like to enter the position using a market order or a limit order. A market order virtually guarantees you'll open the position, but potentially at a less favorable price. Because the order will be filled immediately, its time frame should be a day order. Market orders are best when trading volume for a futures contract is high, so that your broker's price slippage will usually be minimal. A limit order virtually guarantees you'll receive the requested price if the position is opened, but risks never getting opened at all if market prices never meet your limit. Because the order may take time to execute, its time frame should be a good till cancelled order. As long as it remains an open order, you should frequently monitor it to ensure you continue wanting it to remain in effect. In either case, always attach a trading stop-loss order that will close the position being opened. For $2,000 maximum risk, use the amount shown in the open position instructions in your buy and sell signals under the column heading labeled Trail Stop Buy. Because Ascentiv TradeMap optimizes all your buy and sell signals using a trading stop-loss assumption of $2,000. This generally means the most you can lose on any futures contract is $2,000, but your broker can grow or shrink that amount whenever you wish. When you shrink that amount, it makes your smaller losses more likely to occur. When you grow that amount, it makes losses less likely to happen but larger if they do. Because the trading stop-loss order must remain open as long as your position is open, its time frame must be a good till cancelled order. Remember, you're responsible for your investing success. You're always in the driver's seat, and Ascentiv TradeMap is a lot like your car's GPS guidance system. Pay attention to what it says, but override it whenever you need to. That's all the tips and techniques we have to share with you for now. Thank you for joining me on this video. Always be sure to check back in the archives for updates to the frequently asked questions or for additional training videos. And thanks again for being an Ascentiv TradeMap investor.